Hello, everyone, and welcome to another Yieldstreet and Athena Art Finance webinar. Be sure to visit yieldstreet.com to learn more about our offering and sign up to receive any of our latest updates. For those of you that do not know me, I am Naomi Baigell and Managing Director of Athena Art Finance. I welcome you to our panel discussion today called Art as a Business, Changing the Culture Through Accessibility and Opportunity. I am here with, I would like to say 3 newcomers, but they're really not so newcomers to the art platform. But the art ecosystem is challenging in that we're trying to access and get more opportunities for the seasoned and new entrants. And I'm here with 3 people who have spearheaded this initiative. First, let me make some introductions, and I'm apologizing up front because I want to read their bios because they're all so esteemed and I have such great respect for all of them. First is Cynthia Sachs, who is the Chief Investment Officer of Athena Art Finance and my colleague, a premier specialty art-backed lending company. Cynthia received her MBA from NYU Stern School of Business and has over 25 years of asset-based lending and high-yield corporate credit experience across debt, origination, structuring, portfolio management, and trading par and distressed. Among her other positions, previously, Cynthia created Bloomberg's evaluated pricing business, BVAL, in the bond and loan valuation space, and ran Morgan Stanley's global proprietary corporate credit platform within its securitized products division. We also have with us Sean Green, founder of ARTERNAL, the first technology company to focus exclusively on bringing client relationship management, CRM as we all know it's called, technology to the art world. Sean was born in Jamaica and raised in Toronto. He holds a BA in computer science from York University. Since graduating in 2011, Sean has been the consummate entrepreneur, which eventually led him to the business of art. Based in Los Angeles, Sean founded ARTERNAL in 2015 and oversees all aspects of its evolution. Sean's goal was simple: to provide a unified resource that allows art professionals to focus on what they do best: sell art and deepen relationships within their clients. And finally, but certainly not least, is Nigel Glenday, the Chief Financial Officer of Masterworks IO, the leading online platform for blue chip art investment. Nigel has over 15 years of experience in specialty finance, corporate strategy, and investment banking. Prior to Masterworks, he too was a colleague of mine and was Managing Director at Athena Art Finance. And previous to that, he worked for 10 years as an investment banker covering specialty finance, banks, financial technology companies at UBS, Morgan Stanley, and Storm Harbor Partners. So now that that's over, for our audiences, it would be great if you could all give us a high-level overview of your platforms, your services, so that we can all begin to better understand how you differ and how you can optimize and gain access for the people that are viewing. Cynthia, why don't we start with you?
Sure. Thank you, Naomi. And it's great to be on the panel with you. And thank you so much for moderating. I know it's a lot of work, so I very much appreciate it. So Athena Art Finance and our art finance business actually solves a big problem for the art market, which is generally that art is an illiquid asset, albeit very valuable. So to be able to monetize that value, historically, the only option was to sell an artwork, which then would come with, of course, tax consequences. With art lending, you could tap into your artwork's value without selling it, and use an art loan as a way to find the right time to sell. And also, if you're an investor, use the power of leverage to enhance your equity returns. We are finding that as art becomes a more, I'll say, more popular asset class, and I'm sure we'll get into that, looking at art, not just as a collectible, but also as an investment, with the idea of, future increase in value over time. The investment angle has become, something of very, very much of interest to our, clients and our borrowers. So with that, we have created a financial vehicle to, allow for growth in the market.
Nigel, why don't I pass it over to you?
Sure. Thanks, Naomi, and everyone for including me here. So, Masterworks.io. So we are an investment platform that's focused on art as an investment. And really what we sell fundamentally is art is a very interesting and strategic asset class in that it tends to beat inflation and it's uncorrelated. And the contemporary art market specifically has tended to outperform many traditional asset classes over time and really doesn't behave like other traditional asset classes, mainly because art acts like a call option to the ultra high net worth and has really scarce supply. So we saw this really interesting asset class, but really was only accessible by a small portion of the market, generally ultra high net worth, trading paintings between one another. So the V1 of Masterworks is really how could we create a platform that opened up investment accessibility to art as an asset class to the broader investment community. So in many ways, we're really not oriented towards the art market in terms of our addressable market. We are very active in the art market in terms of buying and selling, but many of our investors really comprise kind of the wider investment community, be they individual investors and family offices. So we buy and hold and sponsor single asset investment vehicles that our investors participate in through SEC registered offerings. These entities are generally buy and hold strategies. We hold paintings for anywhere between 3 to 7 years and are really focused on segments of the art market where we've seen historical appreciation rates in anywhere from the low to mid and high teens, and many times higher than that. And where we feel there's really the highest probability of resale and appreciation in the future. We've also built a secondary market, which has been hugely really interesting for many of our investors, and really is kind of a budding area for liquidity and price discovery as well. And really, we're very excited to have even return capital on some of our first deals, including the Banksy Mona Lisa, which is behind me, netting a 33% return for our investors. So yeah, that's us in a nutshell.
And Sean, it seems to me that ARTERNAL is like the resource that holds all this information for those people that want to get exposure and access to these platforms. Why don't you walk us through some of your highlights?
Yeah, ARTERNAL is a business automation solution for art dealers, auction houses, gallery owners, art professionals, really. And it houses CRM, workflows, funnels, the ability to track and manage your clients and your relationships, and gives you as an art business the ability to do the art business while we help you run the business of art. And technology really hasn't had true impact in the art world, as we know. And our lane ways to make sure that the things that were monotonous or making you get stuck in the weeds in your spreadsheets or, scratch notes on the back of business cards or moleskins. We have built tools that help to productize some of the archaic workflows that traditionally the art business has engaged in. And our products are now, given COVID, obviously in demand, because we live in a day where it's a distributed work from home workforce. And how do you ensure that the conversations that you're having with your clients is reverberated across, the people that you work with, your colleagues, so that everybody is on the same page when it comes to communicating with a united front? And so, the CRM product, the client relationship management tool, led our product offering earlier. And then we built full inventory management so that you can handle and manage the asset and then track that asset in relationship to, who you're trying to sell to or who you've been, engaging with and driving relationships to be able to sell to. And so, because the auction business with the private sales and the specialists operate very similar to the galleries, we're able to service both of those clients. And then recently the art fairs are now having conversations with us, primarily because the way how you now need to serve both the buyer, VIP, collector, and the dealer, it's different than your traditional brick and mortar fair. And so whereas you can typically have people descend upon, a physical brick and mortar location, today's art fair is more, it's digital. And so our focus there is to be able to provide the best tools to service or to serve the dealer in that digital art fair experience. And so we're excited to be able to do that. And then in Q2 Q3 of 2021, we're actually going to be deploying the first consumer-focused tool, which is going to essentially be asset and portfolio management for the art collector. And the exciting thing there is, as my co-panelists have suggested, art is a new asset class. It's a unique asset class, but many of the stakeholders or collectors in the space don't have the data and the understanding behind the asset of what it's currently performing at, how it has the asset performed over time. And given the recent wave of transparency with these online viewing rooms and with these art fairs, we're going to be able to leverage that information and push it through to a collector through a sexy and sleek and chic application that allows the collector or gives the collector the ability to feel cool, and be able to show off their collection in ways that they haven't been before. So we're excited about that.
I just want to thank you, Sean, because you had the great segue into my next question, which is really about, innovation and education and empowerment. And through that comes the data. And it seems to me that you all think about data as a very significant role in how you go about doing your business. Nigel, I want to ask you, on the Masterworks website, there are you showcase many works that you own and many works that you don't own, and you show them the purchase price and the realized price. Typically, we see, the escalation of those values, and I'm wondering, how does that benefit your investor, or do you just use it as a tool to bring investors into the gate?
Yeah, no, that's great. The whole data analytics segment of our business is hugely important. It's what we really think is our main value proposition to our investors as they approach the market. What you're actually referring to is our repeat sales database. So repeat sales is really one of the core methodologies to understand art market performance over time. And it's a very similar methodology that's used in housing, which is a similar asset class in that it's generally a characteristic heterogeneous asset class. So we built a database of over 60,000 repeat sale pairs. So these are artworks that have sold twice or more at public auction. And there are a couple of things we can do with that. We can interpolate that into an index, which helps us understand how has a market been appreciating over time, how has it been correlated or not to other traditional asset classes. What we also do is we expose the underlying pairs to our investors so they can get a sense of how certain artists and how certain objects have been appreciating over time. I mean, I think what many investors may not realize or people in the market is that not all artist markets appreciate at the same rate or appreciate at all for that matter. So what's most important for us is that we understand really what artists have been, in a momentum driving market, how long has that appreciation been taking place? So the repeat sales, again, to go back to your initial point, is really a fundamental part of kind of how we build those analytics internally.
And Cynthia, I know from my own experience and yours with Yieldstreet that with Athena, that data and understanding the transactional history of these artists is hugely important. The resale, as Nigel is expressing, is also very important and a cornerstone in how we do our evaluations and come up with marketable cash values for our clients. I know you were the spine of the data analytics that we provide and use, so I'd love for you to go a little bit deeper into that for our audience.
Sure. So a couple of things just to step back. So my background is in banking and finance, but as Naomi mentioned early on, I did do 5 years building a data analytics business for Bloomberg. So in terms of bringing kind of both worlds of experience to a completely new asset class, it was very important for us to be able to, from an investment platform perspective, to be able to decide with data and actually be able to develop and build that data from a proprietary perspective so that we can interpret that data and make the best investment decisions. I do want to just differentiate the difference between Athena and Masterworks is that Athena is a credit business where we lend against the artworks at a certain loan to value ratio, where Nigel's firm Masterworks is actually investing in the equity of the artworks and actually owning the paintings, where we're just a lender. So I just wanted to make that clear. So the way we use data is a little bit different, where what Nigel was mentioning was the momentum on growth, the historical growth rates, using that as a foundation to look to the future based on, expectations of where that artist will go from the historical point in time forward and achieving a return on investment. Well, that's also, of course, important for Athena. We're lending money. It's a credit business, and we charge our borrowers an interest rate. So our goal is to, of course, have our borrowers service that interest, of course, and pay us back. So it's a less risky proposition in that regard, but it's also very important that we understand that the underlying risk is the value of the artworks and the liquidity of the artworks. So we develop, to be able to make those decisions, a proprietary data analytics platform. It helps us make consistent investment decisions on every piece of artwork. To Sean's point, this is built on ethics of transparency and real-time decision-making to drive our process. And in this way, we stick to our knitting of a consistent process of lending, and that we can look to artworks that can be easily sold in the event of default, so that we can achieve full recovery. And that is what has been achieved to date at Athena. And, that is kind of the core of what we want to continue to do for our investors in the, I'll say, debt or credit part of lending against art. And that we are very, focused on managing, mitigating the unique risks associated with art-backed lending that we are constantly solving for to allow for our investments to be very successful as they have. So super important.
Yeah.
Business. Yep.
I mean, I've been in the art world for, I hate to say it, but 35 years. And I remember a time when there wasn't technology and the opacity was real. And people at the galleries would have codes. So even if you saw like letters, you wouldn't even know what number was associated with it. So you couldn't even figure out what the value of that one piece you were looking at was. I also recall a time when the IRS came in and made all the galleries put a chart up of all the actual prices for the works of art that were in the exhibition, because otherwise the gallerists may have decided different values for people walking in the door, the novices and those who were the serious collectors. So this technology, this idea that everything is being a little bit more transparent than it used to be, kind of falls into, Sean, what your organization is doing, what ARTERNAL is doing. Technology is really a focus of how you are giving exposure and depth to your clients. Can you kind of let us know, because you're talking about the sexiness of it, which I think we're all trying to do a little bit of, bring art into a different kind of marketplace, and not just for the culture and the seasoned collector, but really bring it to the forefront of the new entrant. Tell us how you kind of do that with your platform.
Yeah. So, I mean, as everybody knows, the art world, has been broken in certain areas. And from our perspective, it's broken when it comes to technology and how dealers are able to leverage it, or how the art professional is able to leverage it. So what we focus on is building industry leading tools that we've saw in, other, platforms, like your Salesforce or HubSpot or Pipedrive or Zoho, or marketing tools like Marketo and things like that. And so bring these tools into the art world. But the data, what's key is the data of engagement, helping our clients understand who's engaging when, how often, so that they know who to follow up with and have more of that, tactful touch when it comes to communicating and knowing who to communicate with. And so bringing these dealers who traditionally have used on-prem or on-premise solutions into the cloud is one of the main things that we aim to do and continue to aim to do, whether it's an auction house or a gallery. Or a private dealer. And the importance there is, once you're in the cloud, then you can be able to then build the infrastructure to allow people to be able to engage with each other. And so what doesn't exist today is a real B2B, art marketplace. And our focus is building the best tools to allow people to engage. Today, when shutdowns are happening or lockdowns are happening, and people are going to be, confined more to their homes and their local, environments, the art world can't have that global reach that it typically does because people are going from one continent to the next and flying around. And so what's going to be really important is the data, the information. The art world trades on information. And so you being able to have access to that information, who your colleagues are engaging with or interacting with, if they're on a WhatsApp feed or if they're on iMessage or if they're on WeChat, how do you pull all that information into a central nervous system to allow, yourself to do better business by leveraging data? And if you're not making data-driven business decisions, then you're going to realize that you're going to suffer in this particular environment. And when private sales are on a rise, you need to be able to store or have stored, all that information on the particular client so that you can look back on the data and see who you want to engage with. Now, when you look at the collector, this is a completely underserved market. And ARTERNAL is looking at that as an incredible opportunity. Everybody knows that where the bodies are buried are the most important, one of the most important parts to the art world and to the environment or the ecosystem. And for us, our focus is giving the collector the ability to handle and manage their asset effectively and understand how their portfolio is performing, because they can look at their stock portfolio. They can understand the data behind that, right? And so how do you help them have more of a solid understanding in terms of how their own portfolio of artworks are performing over time? And yes, we love, art, for its true essence and its true form and engaging with it. But in order for us to be able to also have this sort of environment to interact in, we need to be able to make sure that the business of art is done well. And so we see a lot of inefficiencies from the business of art, from the collector's perspective to the dealer, and the cables that allow for communication between both, and want to be able to clean that up so that there's data that the collectors can leverage to be able to understand who they want to collect next or how their asset is performing over time. And then the dealer can understand what they should be offering to their collector base and have an understanding of what is currently in each of their collections that is shared, obviously, with discretion with the dealers who they operate with.
It's so interesting to have this conversation because I keep thinking, and I know we've all always said that art is a relationship-driven business, or how we operate in this context is very relationship-driven, which is really face-to-face with people, face-to-face with dealers, artists, collectors, kind of giving us the energy of where we want to go next. But as I'm listening to all of you, it's really kind of the relationship we have with data and technology to help us get to that next level. It's not to remove the personal attachment, but it's really to be additive and bring this other function into it. And it's not always going to be very transparent, but it's empowerment of knowledge. And I go back to, I just literally took it from your website, Sean, innovation, empowerment, education. But I feel as if that all of these platforms are not only giving accessibility to everyone who wants to kind of dive in and take a look, but also puts everybody more at an even playing field, as opposed to just the people that are in the know. And as we've seen, there's been these jumps in some of these very primary market artists that come to auction because even seasoned collectors missed out on the opportunity to potentially buy that work. And the only option they have is now to go to auction to buy something that they created 4 years ago, and they might not even be on the list to purchase their new body of work. And that's where, the typical relationship happens. But what you're all offering is the education so they can really dive into and build their own personal relationship with their art collection, with artists that they haven't seen yet, and understanding really the springboard of the valuation process and how to invest wisely. I mean, I think there's always been this play that art isn't an asset, that people aren't buying for investment purposes, that people just have to buy because they love it. But at the end of the day, whether you're buying a home or whether you're buying, a specialty car, whether you're buying a work of art, you do want to see that those works of art have increased in value over time. Just out of curiosity, there's always lessons learned when we are new to this environment, or things that either are aha moments or we could have done better. I would love for each of you to tell me about something along the way, maybe a glitch that you had to kind of shift, because I think our audience would love to know, look, we're not all perfect. We came to this point after having some glitches along the way. And then there must have been this aha moment where you kind of had something function really more amazingly than you thought. So Nigel, do you want to give us a little key into that?
Yeah, as I think about this, one of the things we really didn't know early on is how many investors, many who aren't as involved with the art market day to day, would react, and what the demand level would be for different artist names. We really thought coming into the business that investors would really want to invest just in household names, whether it's your Monets or your Warhols or your Basquiat's. And so early on, we spent a lot of time focusing on those types of artists. Andy Warhol, Marilyn Reversal was our debut piece, that we closed on a little over a year ago. What we found maybe about a year in, though, and actually we did this when we first launched our Sam Gilliam painting, and which ended up selling out in a day, is that we said, wow, there's actually a much deeper demand here for the asset class overall, and especially in names that may not be as much of a household name, but have a return profile, really a risk return profile that's hugely attractive for our investors. So for us, it was really, the missed opportunity, if anything, was not realizing this sooner. And so, we continue to bring, really blue chip art across artists to the platform, but we're really not as beholden as we were early on in the business to really only those kind of household names that a broader population would find. And actually, it's opened up a lot more opportunities, I think, for us and ultimately for our investors too.
Do you want to take a stab at something that was an aha moment or a learning lesson along the way?
Yeah. For us, so we started out of the New Museums Incubator Program. When we our pivot was accepted into the New Museums Incubator in that 2014-2015 year. And in that year, we were transitioning or doing a pivot from a collector focused application. It's funny that we're now next year going to come back to the collector in a different iteration. But dealers really cared about the sale. And when we were looking at, galleries that are in the Lower East Side of New York, we saw these small, typical, kind of mom and pop shop galleries, under 5, people working in these spaces. And we were like, how are these guys competing globally, or how are these guys competing in the city of New York, in Manhattan, when there's Chelsea, when there's Upper East Side, when there's, Upper West Side, when there's Midtown, and we're just like, we actually should serve these people with our technology first. And so we started to do research and also deploy our technology, in these small galleries, because we thought that that's where ARTERNAL should play. And it wasn't until, we decided to swim upstream a bit and see what a mid-market gallery was doing, what a large gallery was doing, what a mega gallery was doing, that we realized that, the operations are fairly similar internally. They just have more human capital to do, the work, the things that would get you caught up in the weeds as a small gallery. And so we started to branch out, and we were able to have conversations with the likes of, Hauser and Wirth and David Kordansky, and land those clients, within ARTERNAL, to today, having, Phillips Auction House as a client of ARTERNAL. And so, with our humble beginnings of, signing, those 2-person, 1-person, 3-person galleries, we were able to not change our focus, but become additive focus and say, hey, we can go after these bigger outlets and service them as clients. And so we're fortunate to be able to realize that and to be able to have, these other larger names as well as the smaller ones in the ecosystem.
I had a glitch apparently on my computer, live TV here. So Cynthia, I may have spoken over you or not given you the platform. So back at you.
Yeah, sure. No worries at all. So I think you were referring to the aha moment that all of us have had, kind of entering the art space, and I absolutely did. Coming into it, I was, I'll say, very skeptical. Art is a very idiosyncratic asset. And initially I was, very concerned and, not sure if lending against it could be achieved and institutionalized. After we carefully thought about it, started thinking about ways to structure around it over the early years, I very much came to realize that there's always a deal to do and there's always a way to solve problems, which I know all of us, on this webinar have dealt with in our businesses. And, to be able to create a business that very much can be, institutionalized, professionalized, and accepted in the market. So Athena has now been around for 5 years. We have really done a lot of blocking and tackling on how to look at the art market, how to look at artists, how to look at the artworks within the body of work of those artists, how to understand the financial dynamics around, things we've talked about in terms of liquidity, volatility, things that other asset classes very much, are front of mind, but really hadn't been thought about in the way that we needed to, in that we're lending against these assets, and we're trying to obviously protect the downside, which is the way credit is generally viewed. So I know it doesn't sound sexy and exciting, but we've really, I think, done an admirable job of working through it. And I think our borrowers and our clients very much appreciate that. And in terms of, investing into an art loan, clearly there's been a lot of demand. It's been very exciting. And there's, to echo what Nigel is likely seeing on his side, what he mentioned, there is this, I'll say, somewhat of a voracious demand to be, attaching yourself to art in terms of, an asset class and allocating funds from a risk perspective, because it's very hard to do that unless you're actually physically buying the artwork. And we, it's really incredible to see that we now can give, investors options to be able to do that they never had before. So to see the evolution has been quite exciting. I've been so impressed with all my colleagues to work with and figure out how to do it. And there's still more growth to come and more excitement, but it's really been a ride, and it feels great to create something new and innovative. And I'm sure Sean and Nigel, I would imagine feel the same way.
I kind of want to circle back to the beginning, because you all came from different backgrounds, whether it be investment banking or finance or computer science, but somehow you all found your way to the arts. And I'm just curious, because each platform is slightly different, but is gathering for the same purpose. Excuse me. Do you see an intersection among and or between your three unique practices? Cynthia, let's go back to you.
Okay, I don't want to hog up the webinar, but sure, I'll try to quickly just talk.
The other team people, I just you had mentioned something in your description, so I just thought it would be a good segue.
Yeah, no, perfect. It's not necessarily what drove me to the art or art market. It's what drove me to art finance, given my background as a very unique and underdeveloped asset class in the credit space. So. As Naomi mentioned, I came out of big banks like Morgan Stanley and Bank of America. I was very, I'll say, well trained around how to do what I do, lending into more traditional asset classes like corporate bonds, let's say, or municipals or structured products. The credit market for art finance was very nascent, if at all really existing, not institutionalized, which really was preventing the market itself from growing. And actually requiring transparency and all the things that we talked about. So I thought it would be absolutely opportunity of a lifetime to take kind of my skills that I learned over many, many, many years and apply it to the art finance market, to make it institutional, to pour my knowledge into it, and to take an underdeveloped asset class to make it as sophisticated and acceptable as possible to others. The thinking is that a solid credit market will help create valuation growth and appreciation in the core market, which in this case is the art market. So everyone benefits. When there's a strong credit market behind an asset class, like real estate has mortgages and the auto market has, auto loans, et cetera, right? You could go across all of the general traditional asset classes. They all have credit behind them. Creating a credit market behind art really is impactful. So while it's been challenging, it's been really great and exciting to try to cultivate growth, not just for the Athena business and the Yieldstreet business, but also for the overall art market. And I think that will continue as we grow, and the art market is growing as well.
As we're about to wrap up, I just wanted to ask Sean and Nigel, and maybe we'll start with Sean. In your crystal ball moment, what do you see as the next big innovation in this space?
Yeah, for us, we believe that payments is the next real innovation in the art world space. As you probably know, when you're operating in this space, the major banks, Royal Bank of Scotland, or Bank of America, JP Morgan, Chase, these are the largest payment processors, in the art world. And in order to drive efficiency, which is what we're about, you want these businesses operating optimally. And our focus is to continue to be able to create the workflows that allow them to do so. And timing is everything. And we've had the ability to understand technology, but also understand the art world really well and figure out ways where we can fit ourselves in pretty neatly. And banking seems like that next frontier. And to be able to leverage banking as a service technology to be able to process a wire is actually very key. And we're excited to explore this and provide this option, as well as your traditional credit card and checking. But the main fire hose of transactional activity happen via wire. You're talking 80% plus of these transactions. So if you want to be able to make payments efficient and offer, payment plans where the gallery or the dealer doesn't have to chase down the collector for subsequent payments and things like that, or you want to make the process more efficient and track and organize, things around nexus and compliance, tax compliance and tracking, which we've done within ARTERNAL. Payments allows you to be able to understand, where this information flow is, and how to help keep everybody in line. And so our focus is, going to be focused on payments next, because we believe that that's one of the largest untapped frontiers in the art world.
Nigel, do you agree, or do you have another idea of what the new and best next innovation will be?
I'm hugely excited of what Sean's doing on the payment side, and I certainly look forward to leveraging everything that Sean is going to be building. It's payments is its own archaic universe, and add layer that on top of plenty of the archaic processes in the art market, and it's an area that's certainly ripe for plenty of innovation. I may be usually just kind of more general, skeptical around kind of great leaps in innovation around the art market. It's certainly a more gradualist market, just in terms of new innovations. I mean, from my seat, this intersection between the broader alternative asset management universe in the art market, I think, is a secular trend that is going to continue. I don't necessarily see any sort of, great acute breakthrough that'll be resulting in a short period. But I would say over kind of the medium to long term, there are going to be platforms like Masterworks, like Athena, and others that really are helping organize, I would say, institutional, managed money, self-directed, kind of, I would say, non-art world capital around art as an asset. At Masterworks, we've seen a huge amount of investor appetite and interest and really buy-in the story around art. They understand it's uncorrelated. They understand how it's performed relative to other traditional asset classes. There is a fatigue with other kind of traditional investment alternatives, and there's really an openness to saying, well, okay, how can I incorporate something like this as part of my portfolio? So we're seeing that. We think that's going to continue. We certainly want to be at the forefront of that trend. Absolutely. I can see Athena on the credit side being equally important in drawing in that type of capital to the market, which I think ultimately accrues to the benefit of the art market, because this is a whole new source of liquidity that's coming from outside that will help drive price discovery, drive liquidity and transaction value, which I think just is really what will be the foundation to kind of a healthy market in the future.
Well, yeah, and I just want to say in closing, there's been a lot of speak about how COVID has really engineered and executed a lot of creativity in the art space because we haven't had to be challenged in the past before. But you three have really showed us over the last 5 years that you've been engineering and being innovative and being creative well before COVID was even a word in our vocabulary and probably now in the dictionary. So I want to thank you all for being those innovators, for being those entrepreneurs, for bringing these new accessibility programs to the platforms for not just the season, but the new entrant collectors. It's hugely important to the art world and to the art market. We can't rely on just the people that already have a foot in there. We need to continue to dig and plant seeds and have new fruits grow. So thank you for spending the time with me today, with Yieldstreet and Athena Art Finance. I hope our visitors have learned a lot. I know I certainly have. It made me shift my thinking about certain things. So I hope you all have a lovely day and an upcoming Thanksgiving. And I look forward to speaking to you in person one day soon, but I guess this will have to do for now. Have a good day, everyone. Thanks again.